Business loan, low interest rate. How can we put those two together so you get the lowest in the industry? Hi, my name is Michael from Viral Funding Solutions, and I'm going to get right into this. No further introduction. So you have to know about the different types of products and services when you're getting a business loan. That meaning, are you going for some type of an SBA loan? Are you going for some type of a loan through a private lender? Is it backed up by collateral here? Is it not collateralized? And so forth. So I want to start off by saying to get the lowest interest is to provide some type of an asset. So this is on asset financing. So you can provide something like accounts receivable to keep it even at the lowest interest rate, sometimes up to 2%. And then you have other forms, which you have stocks and bonds, equipment, inventory, 401k, IRA, etc., that can help you get you somewhere up to 5% and even above that in other cases. So you have to understand that if you want to get the lowest interest, you have to provide a form of collateral or a form of an asset that you're giving up, what you're foregoing, your opportunity cost to get the type of funding you're seeking. Now, another thing you have are SBA loans, which are very common. I'm sure you've heard of them. Perhaps you've gotten funding through them, or you are trying to get through with success or without it. And you're like, what do I have to provide? So it just depends on the type of SBA loan, how much you can get guaranteed up to, what the value of what you're getting, how much financing you can get. Maybe you're purchasing an existing business, how much you can get guaranteed for that. There's a lot of uses for it, but it can be backed up by collateral, some form of real estate to give up. And at times they will ask for a down payment as well. It just depends on the SBA loan type, which I won't get into in this video. But if you would like to learn about that, then look down below in the video, in the description, where you can get further content on all SBA. So just to know, there's the asset lending side of the equation. And then in a sense, you also have the SBA, where you can provide some form of a down payment, collateralized to get the loan for putting in real estate, something tangible. And sometimes you don't have to. In a lot of cases, you do. So keep that in the back of your mind. But you can get lowest interest rates from like 5 to 7% and even higher. And again, it depends on what type you're getting. Another form you will get, and this isn't so much, it can be low interest. So we'll start there. You can do equipment financing. That's another form. They can give you some years out. Perhaps it's a personal loan, personal/startup loan you're looking for. And there are a variety of other ones as well. Now, if you're seeking access to fast funds, that's where the interest, if we're looking at it from a graph and we're not even picking up, right? Think about it like as an airplane. We're like at the bottom. We've lifted up the wheels. We're in the air. And this is where asset-based lending is, the SBA loans, and a few other things. You can even put equipment financing in there in the mix. Sometimes you may want to put collateral that's required of you to drop the payment or to drop down payment and so forth, or to get you where you need to be. And then we're getting into a higher altitude. And when we get into this, we're talking about fast money. Fast money being things like cash advances, merchant cash advances, I'm sure you've heard of. There's hybrid cash advances. And then there are other ones out there like unsecured term loans, perhaps secured term loan, but you're backing it up with collateral. So it drops the interest, but the interest can still be high. And there are other products out there as well. Usually, if you can get fast access to funding right away, that usually comes with that contingency of it being a medium to a higher rate, specifically with private lenders outside of the SBA. So there's a criteria, if you go through a traditional bank, you can get the lowest. If you can go there, great. And if you're looking for an online banking solution, I can help you with that as well. They can offer low rates, 3 to 5, 5 to 7, 6 to 18%, depends on the product or the service. And then we get into more of the fast money loans where they're looking at like total paybacks, factor rates can be higher, interest probably like 20 to 45% plus. In some cases, it depends on what you come with, funding details. But at the end of the day, what you have to look at is, does the benefit exceed my repayments? And this is what I tell a lot of business owners is, don't just look at the interest rate. Don't just try to go for something that's low, especially if you need the funds and you're like, well, I'm in a tight pinch, or I need it for growth and expansion. And this is also going to keep my business stable and it's going to increase my profits. And I'm about to hit a hard season. And this is when our business starts picking up. And I don't want to wait 1 to 3 months. In a lot of cases, people wait 3+ months for SBA loans. And not everybody needs those. Even if you qualify for those, I help out a lot of people understand that. Do you really want to take on that kind of debt for what you need? Do you really need that cushion of longer terms, even if you qualified? As opposed to going over here where, yes, the total payback may seem a little higher, but your cash flow is in the right spot, as well as you're going to be making the returns on those funds that you're getting initially, and you're going to be profiting. You're like, I'm paying it back, but I'm doing well. It's fine. And maybe I don't see a return right away, but it's going to do it in about a month from now. So it's going to be okay for me. And there are a lot of things you have to understand your business. And again, it comes down to, does the benefit exceed the repayment? If the repayment is too high, then, and the benefit is here, or is just below it, or is just even matching it in a lot of cases, then you will always be in a battle for getting the lowest interest. You will always be in the battle of, I need better terms, I need longer ones, I need this type of monthly payment, I need this and that benefit to this. Instead, you're not going to be paying attention to just the repayment, which is what the goal should be a lot of time is, what is my repayment? So what, the interest rate can be a little bit higher here, but I need the fast funds. And it's not always specifically, when you get fast funds with medium to higher interest, it's not all survival money. For the most part, you shouldn't be using that as your primary use. It should be used for fueling growth and expansion, for scaling and so forth with your business. Not, I'm going to a private lender, yeah, so medium, higher rates, I have good cash flow. If you had bad cash flow, I wouldn't recommend it because it can hurt it. Perhaps a hybrid line of credit or a different line of credit program would work, or a different service. But you have to look at it and say, well, yeah, I can get over the fact that it's that, and I'm going to use it for growth and expansion, and it's really going to help. The IDLE has really programmed, and even all SBA loans has programmed myself and yourself to think, hey, this is what the interest rate should be all across the platform, from one side of the spectrum to the next one. And that isn't the case. And it shouldn't, again, be a battle of the interest, the terms, the type of payment in a lot of cases. It should be a question of, what is my repayment on a daily, weekly, biweekly, and even on a monthly basis. And you got to do projections. You got to understand how you're injecting the funds into your business, and is it going to keep you stable, afloat? Is it going to increase your bottom line? All three, et cetera. And how you go from there. So just to recap, to get some of the lowest interests in the whole industry of business lending is to provide some type of an asset-based lending, also called secured finance, secured term loan financing, however you want to call that. And some of these can come with shorter, some of them can come with medium and even longer terms, but you would lower the interest. Say, for example, you get into a 7% situation, but it's dropped down to about 5%. Would that help you? Would it make much of a difference? Is it necessary for you to do? So just understand that not always because you have collateral should you give it up. You have to understand, again, the structure of your business. And sometimes people use secured term collateral because maybe they wanted a line of credit that they couldn't get approved for $500,000 with one program. So then they put some kind of collateral behind that, and then they got approved for more, or then this happened and they were able to do this here, or get a lump sum, et cetera. So asset-based lending, as well as it moves into the SBA loans, which can be the same when you're putting some type of collateral, some type of real estate, et cetera. And just understanding that there are down payments involved, and that there are different SBA programs, the amount you can get approved for, the amount you can get guaranteed, what are the requirements for collateral. And I have helped out a ton of people. By the way, if you would like to get help on that, now that we're kind of getting to the end of this video, I've shown you everything. If you'd like to get help, I have a free questionnaire I've left down below in the description. You can simply fill out some funding details. It'll land in my email. It's confidential between you and I, and it's a questionnaire, not an application. So what I will do is then analyze, evaluate, and then give you a proper response back via email what your best funding option and options are. And it's very personalized and customized for you. So it's going to be very large, and it could be very large for the most part, but it's going to give you everything like qualifications, how it works, video, reviews, all of this, application pages, what you should do, what you should look out for, and so forth, more bonus tips, conclusions, bonus material. But that'll be down below in all resources on my site, etc. if you would like to get to know more about myself. But yeah, just get to know that low interest, what it's backed up by, what are the expectations. It's some of the different types of services, even equipment financing can be put in there, personal loans / startup loans, etc. Even in lines of credits, depends on the way you're going about it. If you're using it to build your business credit, if you're doing it through business credit cards, which is something if you want to learn about how to build business credit, which I strongly recommend everybody does, learn down below where you can get access to over 250,000 in funding that's not tied to your social security number or your personal credit score. And in some cases, not even your personal guarantees are involved. So look for that down below, as well as all the other information. Fast business loans usually come with medium to high interest rates. Just got to look out for those. But you got to ask yourself at the end of the day, what do I qualify for? And if I qualify for this, does it make sense for it with the use of funds and so forth? And look at the repayment and so forth. All right. So that is everything from me. If you have not subscribed, please go ahead and do so and click the bell notification icon so you do not miss any future videos I come out with. For any questions, comments, or concerns, please voice them for me down below in the comment section. And if you got value out of this, yes, please give it a thumbs up and share it with others who you feel will get value out of this so they can also get the amount of help that they need. All right. That is everything from me. Talk soon.